My portfolio is up more than $11,000 today. The Dow rallies 700 points as new data raises hope that the US inflation may be peaking. And so, as we've seen, when inflation goes up, it scares everybody. The Fed has to raise rates to stop spending, slow people's spending, and that hurts the stock market. The stock market's been crushed. Inflation has now come in under the analysts' expectations, and this stock market is having probably the best day of the year, as is my portfolio. It's just crazy how these small differences make such a big impact. The Consumer Price Index, a broad-based measure of goods and service costs, rose 4.4% for the month and 7.7% from the year ago. This was its lowest annual increase since January. Economists were expecting increases of 0.6% and 7.9% according to Dow Jones. Excluding food and energy costs, so-called core CPI increased 0.3% for the month and 6.3% on an annual basis, which were also less than expected. This is the big thing, right? Treasury yields plunged after the CPI report, with the 10-year Treasury yield falling more than 18 basis points to 3.946%, following below the key 4% level. The yield on the 2-year Treasury dropped more than 23 basis points to 4.395%. When yields go down, risk assets or stocks get more attractive for investors. That's the bottom line. So you can see all these big tech names: Nvidia, Tesla soared 7.5%, Salesforce is up 7%, Apple's up 5%. The cloud ETF, which I own a lot of cloud stocks, about to show you my whole portfolio and how it's doing today, jumped 13%. Meta layoffs, a potential welcome shift. Bank of America says, you know that I own Meta if you've watched any of these videos where I share my portfolio. I have only been adding to the position, and so that kind of confirms my position right now that Meta is in like a win-win scenario. They cut spending, stock's going to go up. The metaverse starts to work out, stock's going to go up. I really like where Meta's at. All right, let's jump to the day, right? So this is crazy. I share my portfolio, my M1 Finance portfolio, very transparently. This is the actual brokerage, right? And you can see all time we're down $19,355. We've put $133,000 in, and the portfolio value is currently $113,712. It's not even showing the daily update, because I think M1 Finance doesn't actually believe that my portfolio is up, so they're having to recalculate everything, double check. Now, the reality is I think it's such a large movement that for whatever reason, it's just not updating. It's funny because when my stocks are down a lot, the portfolio seems to update all the time. M1 Finance, if you're listening, let's fix that, all right? But we could see over the last week, it says up 5%. I don't even think it's really updating. Again, you could see on the 8th, portfolio value is 104,000, and then today it's showing at 113. So I do track it here on Seeking Alpha, and it's saying a gain of 13.58%, which isn't 100% accurate because I don't have the position sizes. It's just taking these as a whole. But this is crazy. These are the companies I own. Cloudflare's up 21% today. Rocket Lab is up 19%. Bill.com's up 18%. GitLab's up 18%. MongoDB 17%. Snowflake 15%. Shopify 15%. Datadog 14%. CrowdStrike 9%. Mercado Libre 6.5%. Tesla's up 6%. Taiwan Semi's up 5%. And Meta's up 5%. And it's been on a tear over the last week. Over the last 5 days, Meta's up 14%. And on the month, which includes their terrible earnings drop, the stock's still down 20%, but it's just way better than it was. It got to down as much as 33% on the month, and now it's recovered a lot. Okay, and you can see here, actually, this is where I track my portfolio on Savvy Trader, which sends out free updates anytime I make a transaction. If you subscribe, you can get them via email or SMS. There's a link down in the description if you want that. This is where I do actually track the dollar value, and Rocket Lab is up $1,800 on the day in my position. You can see I've got about $10,000 total invested in it, and now the total gain is actually positive on it. Snowflake is only down about $2,800. I've got $13,000, a little bit more invested in Snowflake. Shopify's up overall. Meta's only down $4,300. I've put $26,000 in, and it's currently worth about $21,600. Datadog is coming back, only down $2,500. And so you can see with this crazy gain today, these positions are coming back big, okay? Now, what does this mean from here? Am I thinking about selling? Am I thinking about locking in gains? No, I'm not. I'm a long-term investor. I'm going to continue adding to my portfolio every single month, the best stocks that I can think of. This is not for everybody. Most people are better off just doing index funds or ETFs. So something like a Vanguard fund or a Schwab total market fund, or SCHD is my favorite dividend fund, which you see me talking a lot about. I'm in this for the long gain, right? And so this is fun. I fully expect some of these to drop today. I fully expect more volatility in the future. I don't know what's going to happen with a recession or CPI data. What I'm trying to show is a realistic picture of what investing for the long term looks like. The wins and losses associated with investing in individual stocks, which is what I have chosen to do. You can see how bad my portfolio is still down $20,000 year to date. That's a lot of money. But what I'm after is I think I could beat the market with individual stocks. But what I'm truly after, and what I hope to inspire people to do, is invest for the long term and not get scared out of the market because of crazy things and trying to time the market. This is a really cool website, officialdata.org. I have no association with them. S&P 500, $100 in 1900 would equal $8.7 million in 2022 if you just left it alone and never invested more. So you would have started in 1900 with an S&P 500 value of $6.10. Now it's at $3,770. That is a 61,000% change in price. And this is what's crazy about dividends, right? So that's just the price appreciation is 5.41% per year. But if you include dividends, that's where you get that 8,794,087% gain. Wow. Which is only 9.71% per year, but that's what we talk about when we say the average of the S&P 500 is about 10% per year. Well, since 1900, that's how you get there. If you adjust for inflation, so take out inflation, you're still equaling a 6.57% gain per year. And so a nominal amount, meaning without taking out inflation, you have that $8.794 million, but you have $247,000 if you adjust for inflation, meaning the buying power, the actual value of that $100 now in same terms is $247,000, okay? That's the purpose of long-term investing. If you like individual stocks, great. If not, go with an ETF or index fund. Don't get spooked out of the market and don't try to time buying in and out based on this inflation data. No normal person that isn't staring at the market every second of the day can successfully time the market. And I don't even think people that are staring at the market every second of the day can. If you like this type of content, do me a favor. The way you can support me, I'm not asking you to buy anything. Like the video and subscribe to this channel. That really helps more people discover it. And I want to be able to get paid through YouTube ads for this work, which can be kind of annoying, but it doesn't cost you anything. And that helps me do that. Thanks a lot, and we'll see you next time.